Morning is the analyst behind that call, Jefferies' David Katz. Great to have you, David. Thanks for the time. You go all around the horn. You talk about leadership, capacity, fuel. Ladder that out. What's most important to this story right now?
Yeah, look, and as you pointed out, Carl, in your intro, this stock has clearly had a bounce off of the bottom, and it's had a fast money trade that has worked. And our call is that it's now time to start investing. But you hit a number of the points. For us, the big change has really been the change in management team and how engaged and how focused they are. We at Jefferies appreciate the benefits of a flatter management structure, and that's what Carnival is doing. And it's for the first time in many years. Performance marketing and more sophisticated marketing approach are examples of some of the initiatives that they're pursuing. But I think it's also important to recognize the demand surge is just getting started for Carnival. Right? Anything with large groups of people is just taken longer logistically to recover. And that's true in cruise, and it's true for Carnival. So our argument has been that they don't have a ton of pricing power. Well, guess what? They don't need it. They just need customers to come back, occupancy to fill up, the onboard spending to come, and the cash flows will flow through. And within the EV, converting that debt into equity value is really where a lot of that value expansion is coming from for now.
David, you getting pushback after upgrading a stock after 130% year-to-date run-up when a lot of people think this is as good as it gets?
We are not getting a lot of pushback. And, the fact of the matter is, as I said, we've talked to a lot of hedge fund clients who have been enthusiastic on this for a while and have been able to make the trade off of that 30-year low that you all talked about. But the point is, what happens now? Where does it go from here? And that's the question, the hard question we've had to ask ourselves and answer. And we think higher. And it's higher because it now becomes an investable stock. Leverage is 6.8 times going to 4 times next year to into the 3s and back to that 2 times level that we put on the front cover of our note. And if they can get back to that 2 times level, the upside from here is another 30% on top of our price target, which is what we mapped out in the note, Sarah.
Do you ever, I guess the question is how you build in would-be scenarios. I mean, we're all familiar with the period in which the industry was tormented with stories of either illnesses. Certainly COVID was the ultimate example of that. I mean, that's a situation that will probably happen again at some point, right? Another norovirus or something like that?
The structural, elements of a cruise lend themselves to those kinds of events. But here's the thing. When you showed up at their analyst meeting the other day, which we did aboard a ship on the west side, and saw the large numbers of people pouring off a ship, right, as we were about to get on to meet, with the management team and go through the ship, the customers are there, and tens of millions of people love going on cruises every year, irrespective of whether any of us enjoy it. It is a value offering, particularly for Carnival, right? And, whether there's a trade down if we're headed toward a recession or not, these are the facts. Tens of millions of people go, and they can't wait to go again because of the value offering that it presents. And there's no getting around that.